So Netflix looked at $170 billion and just said, you know what, not worth it.
Which, honestly, respect. That's not a deal, that's a ransom note.
And now Paramount is pinky promising that $6 billion in cuts won't mean layoffs.
Hollywood has heard that line before. They know exactly how it ends.
Come on, maybe they mean it this time.
Nate.
Yeah, okay, I don't believe that either. The rundown.
Okay, $33.4 billion. BlackRock and EQT just swallowed AES Corporation whole.
Infrastructure plus private equity. That's a love story as old as time.
A very expensive love story, including debt, by the way. Always read the including debt part.
Always. Okay, bigger. Devon and Coterra.
$58 billion. Largest megadeal of 2026 so far, and we're not even halfway through the year.
And look, I know everyone's going to say oil and gas consolidation, blah, blah, but this is actually a defensive play. Essential assets, predictable cash flows in a market where smaller deals are drying up.
Deal volume is down 22% year over year.
Right, but mega deals are up 57%. The big fish aren't waiting around.
They're eating each other. Moving on, and I love this one. Quantum Computing Inc. acquired NuCrypt for $5 million.
$5 million.
$5 million, cash and stock. In the same week, someone spent $58 billion.
That is genuinely funny. That's like buying a studio apartment the day your neighbor closes on a private island.
And yet, quantum communications is real infrastructure, long game.
I respect the $5 million bet, truly.
Lonza carved out its capsules and health ingredients division to Lone Star funds, but kept 40% equity.
Oh, that's smart. That's the I'm selling my car, but keeping a key move.
They believe in the upside, they just want someone else to run it.
Honestly, respect.
And then there's this 2.0 group dropping 704 million UAE dirhams on Italian luxury packaging company ISEM.
Luxury packaging is a real business, and I will die on that hill.
The margins on a fancy box are genuinely obscene.
The box costs more than what's in it sometimes.
Which brings us to the deal that makes all of this look small. Paramount Skydance, Warner Bros. Discovery, $170 billion.
And Netflix just walked away.
That story deserves its own segment.
Good thing we have one. The big one. Okay, so $170 billion. I need a second with that number.
Take your time.
Paramount Skydance buys Warner Bros. Discovery, one of the biggest media consolidations ever, and Netflix just walked away.
Which is the part I can't stop thinking about. Netflix didn't walk away because they didn't want it. They walked away because Paramount bid so aggressively it wasn't worth the fight. That's a remarkable thing to say about a $170 billion deal.
Netflix looked at $170 billion and said, you know what, keep it.
Which either means Netflix is extremely disciplined or Paramount just massively overpaid.
I think it's both, honestly. You can be disciplined and your competitor can still overpay. Those aren't mutually exclusive.
Fair. Okay, so the deal structure, $6 billion in cuts over 3 years, and Paramount is out here pinky promising Hollywood it won't mean mass layoffs.
And Hollywood is greeting that promise with the energy of someone who has seen this exact movie.
3 times.
At least, look, $6 billion doesn't come from renegotiating the office coffee contract. That's people. That's content budgets. That's whole divisions.
And here's what bugs me. They're not being specific about where the cuts come from. The press release is beautifully vague. Operational efficiencies. Synergy realization. I love synergy realization. It's such a polite way to say
Layoffs.
I was going to say pain, but yes.
Okay, but devil's advocate, and I genuinely hate that I'm about to say this because I sound like a pitch deck.
You really do.
The combined entity here is enormous. Warner's library, Paramount's distribution, the streaming assets. If you believe scale is the only way to compete with Netflix long term, this is the move. You have to get big or get bought.
I don't disagree with the strategic logic. Scale matters in streaming, absolutely. My question is whether $170 billion is the right price for that scale, because you're paying a premium that assumes the integration goes perfectly.
And integrations never go perfectly.
They never go perfectly. The average deal is taking about 150 days to close right now. Triple what it was before 2020. Every day you're not integrated, you're burning money and losing talent.
So the race isn't just regulatory, it's cultural. Can two very different companies actually become one before the debt load starts screaming?
That's the whole game, and we're going to find out pretty fast. Antitrust filings are expected within days, which means our next segment is going to feel very relevant very soon. Voices. Okay, so analysts are out here pointing out that total deal volume is down 22% year over year, and I keep seeing that number and thinking, that sounds bad. But then you look at Megadeals, the billion-dollar plus transactions, and they're up 57%. Those two facts don't belong in the same sentence.
They absolutely do, though. That's exactly the sentence. Big players are hoarding assets, everyone else is frozen.
Defensive consolidation. That's the phrase I keep seeing. Healthcare, energy, semiconductors, AI infrastructure. Acquirers are circling essential industries like they know something we don't.
Or like they're scared and buying certainty. Devon and Coterra at $58 billion, BlackRock taking AES at $33.4 billion. These aren't growth bets. These are, I need to own this no matter what happens next bets.
Which, fine, strategically coherent. But here's what nobody's talking about enough. The timeline problem. Average time to close is now 150 days. That's nearly triple what it was from 2016 to 2019.
53 days back then. That was a different regulatory universe.
It was a different planet. And now every one of these megadeals is sitting in a 150-day pressure cooker where anything can go wrong. Rates move, markets shift, executives get cold feet.
Executives get poached?
That too. The Devon Coterra deal closes in that window, great. But Devon Coterra with a regulatory curveball halfway through, that's where you earn your M&A grey hairs.
I have many. Genuinely, I can confirm.
What I want to know is whether the 57% megadeal surge is confidence or desperation, because those look identical from the outside until they don't.
That's actually the question that takes us straight into the Warner Brothers Discovery deal, which is, and I say this with full awareness of how insane it sounds, $170 billion of someone else's problem. Spill the tea. Okay, so Netflix just walked away from a $170 billion deal because someone else wanted it more.
Which sounds insane until you remember that's actually a completely rational thing to do.
Is it though? Because now Paramount owns Warner Brothers Discovery and Netflix is sitting in the corner like they never wanted to go to prom anyway.
They didn't get outplayed, they got outbid. Those are different things.
Maya. They lost a $170 billion asset because the other guy raised his hand higher. That's getting outplayed.
Fine. Agree to disagree. But the part that's really sending me is the $6 billion in cuts quote. Paramount stood up and said $6 billion in cuts, no mass layoffs, with a straight face.
With a straight face.
Hollywood has seen this movie. Literally, they've lived it. The cuts are always the people.
You cannot take $6 billion out of a media company without touching headcount. That's not how media companies work. That's not how any companies work.
The footnote writers at Paramount are earning their salaries this week.
Meanwhile, can we talk about Denso quietly sidling up to Rome Co. like it's no big deal?
Oh, that's a sleeper story. Japanese semiconductor consolidation, very quietly happening.
It's never quietly happening. It's always loudly happening and nobody's looking.
Which is exactly why we're watching it. Denso, Rome. If that gets confirmed, Japanese chip stocks are going to move fast.
And we've got Warner Brothers Discovery, antitrust filings probably dropping any day now. Devon Coterra still grinding through its 150-day regulatory window.
It never ends.
It really never ends. Stick around because we've got the AES acquisition next, and that one has layers. Tomorrow's radar. Okay, so tomorrow, Denso and Rome Co. That's the one I'm watching most closely.
Same, because right now it's still just discussions. The second there's a formal confirmation, Japanese semiconductor stocks are going to move hard.
And given everything happening in chip consolidation globally, this feels like when you see one domino wobble and you already know what's coming.
Meanwhile, Devon Coterra is still grinding through its regulatory journey. $58 billion, and we're just waiting.
150 days average close window now. Used to be 53 days. That's not a process, that's a hostage situation.
That's very dramatic.
I stand by it.
I'd also keep an eye on Warner Brothers Discovery. Antitrust filings are expected to start taking shape, and that's where this deal either holds together or gets very complicated very fast.
And complicated is my favorite flavor.
Speaking of complicated, you are not going to believe what we found in the Paramount numbers.